Financial security. Financial security is an important aspect of life for families. It provides a sense of stability and safety in uncertain times, and helps to ensure that family members can continue to enjoy a comfortable lifestyle. Achieving financial security requires careful planning and the implementation of strategies designed to protect the family's financial future. This involves carefully considering investments, budgeting, debt management, insurance coverage, retirement savings, and other financial planning measures. By implementing these steps, families can achieve greater financial security and peace of mind. Financial security is a key aspect of life, and it is especially important for families. After all, family financial security ensures that you are able to provide for yourself and your loved ones. It also gives you peace of mind. When parents have financial stability, they can rest assured that they will be able to provide their children with the best education, health care, and other necessities. Financial security is not only about having enough money in the bank, it is also about making sure that you have the right strategies in place to protect your finances from unexpected events, such as job loss or medical emergency. It's important to consider different ways to proactively build family financial security so that you can be prepared for whatever comes your way. Having financial security is important for any family. It provides the peace of mind that your family is taken care of in the event of an unexpected financial hardship. Financial security comes from having a budget and living within your means, creating an emergency fund, and understanding the importance of insurance policies like life and health insurance. Additionally, investing in stocks, bonds, and mutual funds can help to create even more financial security for your family's future. Deal with financial stress. In the past couple of years, many of us have watched colleagues, friends, and even family members grapple with the loss of their job or face a substantial pay cut. For many of us, it has driven home the fact that even seemingly secure jobs might vanish overnight. But even if one's monthly income were to decrease or cease altogether, the same is not true for our financial obligations. While such unforeseen events cannot be avoided altogether, one can take a few steps to ensure that such emergencies can be overcome with minimal distress. We will discuss some steps and strategies that you can use to ensure that the adverse impact of a salary cut or job loss is minimized. Revise your budget. So, you will have to take a closer look at your monthly budget and revise it in line with your current income. To make the budget, you have to look at not just your revised income, but also your expenses and savings. Once you have this information, you need to figure out if there are opportunities to reduce any of these expenses. You should consider reducing the amount you save every month only after you have exhausted all avenues related to decreasing your monthly expenses. Also make sure that you avoid the common budgeting mistakes when creating the new budget. Eliminate or reduce optional expenses. In your original monthly budget, you would have probably set aside some money for optional expenses such as eating out, watching a movie at the cinema, magazine subscriptions, etc. While you can try and completely eliminate such expenses during the current emergency, it might not be possible. What's more, if you try and live too frugally, you might end up resenting your new budget, making it difficult to stick to it. So, instead of trying to eliminate these expenses altogether, you could try and focus on reducing these to the bare minimum. Additionally, you can also try and come up with low-cost alternatives. For example, opt for a family movie night at home instead of an evening outing at the theater, or cooking dinner together as a family instead of eating out. If you put your mind to it, you will probably be able to come up with many more such activities that are fun but require you to spend little or no money. Augment your income with freelance work. If you are in between jobs and are on the hunt for a new job full-time, you should consider taking up freelance jobs. Currently, there are multiple websites that are specifically dedicated to matching the skills of freelance workers with potential clients in need of such skills. You can also consider doing the same to augment your income in case you have faced a significant pay cut. While the income from freelance jobs might not be as regular as a monthly salary, it does provide you with two benefits. Firstly, any earnings from such freelance work will help you augment your income. Secondly, these freelance projects can also help you hone your skills while providing additional networking opportunities that might come in handy in the future. Fall back on your emergency fund. If you have planned ahead and created an emergency fund earlier, losing your job is one of the times when you should use this fund. Ideally, you should have enough in your emergency fund to cover your monthly expenses for 9 months to 12 months. You might be able to make it last longer if you stick to your revised budget and eliminate frivolous expenses. If you have faced a salary cut, you should avoid using your emergency fund to make up the difference. Instead, it would be a better idea to reduce your expenses and live within your means, while keeping your emergency fund intact. This way, you will be better placed to tackle future emergencies that might arise. Use systematic withdrawal plan for regular income. Unfortunately, not everyone plans for emergencies equally well. So, you might not have built a sufficiently large emergency fund, or worse, might not have saved for an emergency. If you have exhausted all other avenues to make ends meet, such as cutting expenses, decreasing savings, augmenting your income with freelance jobs, there is one last option. As a last resort, you have to start withdrawing from your existing investments. If you have invested in mutual fund schemes, consider redeeming your investments via a systematic withdrawal plan (SWP) to generate regular income over an extended period of time. While doing this will impact your long-term financial goals, it is still a better option than taking on additional debt. Avoid taking on new debt. The one thing you should avoid at all costs, at this time, is to take on debt, such as a personal loan or a loan against your credit card. These loans might seem like a relatively easy way to get out of money troubles in the short term, but there's a catch. The interest rates you have to pay for these loans can be as high as 24% p.a. What's more, due to lower income after your salary cut or no regular income due to job loss, these interest rates can be even higher, as you will be considered a high-risk borrower by banks. So, in the long term, you run the risk of falling into a debt trap and find it difficult to pay off your debt. Make sure your family is protected financially. What's the first thing that comes to your mind when you think about your family? Most of you would say, it's their safety. Everyone wants their family to be safe and secure. After all, family acts as a life jacket in the stormy sea of life. Similarly, your family's financial security is also important. Although, not all of us are fully aware of the ways that can help us protect our family financially, against all the uncertainties. As we know, life is uncertain. You never know what happens to you the very next moment. And if you are the only breadwinner in your family, then your family might have to suffer through financial crisis in your absence. Thus, you need to plan, as it plays a very important role in securing your family's financial future. Here are some of the ways that will help you keep your family financially protected. Plan your finances well. These days, nothing is predictable. Anything can happen to your wealth or savings at any point of time in life. Therefore, you need to learn how to manage your finances. This is not just good for you, but also for your family's financial future. Moreover, this will let you save and invest properly. Buy adequate insurance. This is yet another important factor you need to consider if you want to safeguard your family. You work hard every day to fulfill your family's present and future financial desires. But who is going to take care of your family's well-being if something unfortunate happens to you? Thus, if you are the only breadwinner in your family, then it is prudent to buy a term insurance, as it will take care of all the liabilities even when you are not around. A term insurance plan is a pure form of life insurance that offers life coverage for a certain period of time. Hence, you must buy it as early as possible. Get rid of all the debts timely. There are several good reasons to fall into debt. Be it buying a house, starting a business, child's education, marriage, etc. Majority of people take some kind of loan, i.e. personal loan, house loan, car loan, etc. in order to meet their short-term or long-term financial goals. Debts may help you with some money in the times of need, but if you do not pay them back on time, then these debts will make your life difficult. Not only it will affect you financially, but it will also weigh heavily on your mind and body. Therefore, it is advisable to make your debt payments within a reasonable amount of time, especially the big ones like personal loans, home loans, or credit card debts. There are several online tools that can help you with this. Also, you can speak to your financial advisors about this for a better understanding and guidance. Take some professional help. There are several articles and books available online about financial security, which can help you get through your financial goals. But the one thing that will really prove useful to you is some professional help. This will help you get the best guidance that is required in order to be financially secure. If you don't need any sort of professional advice, then you can seek help from your family or friends around you. There must be someone in your family who has gone through financial ups and downs, and would be knowing the best tips and tricks to boost your financial security. Ensure to have a savings account. This is one of the best ways to ensure your family's protection. One must have numerous savings accounts, so that in case something unfortunate happens, then you can make use of that fund. No matter what, one must have emergency funds to cover their expenses. This way, you will have enough money in the need of the hour. Also read what is family pension. These are some of the necessary steps that you need to take if you are thinking about your family's financial security. Besides, if you are buy a term insurance policy, online or offline, to protect your family. Bottom line. It is true that losing your job or facing a salary cut at work is not easy, but such adversities can be managed so that their long-term impact is minimized. What is perhaps most important is to ensure that one does not lose heart when facing such adversity, and stays on course to overcome the adversity. If you like the video, please subscribe.